Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassagam. Today we're getting into our weekly numbers for week 27 as of today's date, January 25th, 2025, which is Saturday. So let's get into our weekly data. Week 27, still going strong. Pretty much at the halfway point now, like six-ish months in. So our portfolio net worth is $363.91. And again, that's as of today, January 25th, 2025. We have our portfolio weekly data, and I do not know why the chart looks like it's cut out right here. I'm not sure what the program, I use M1 Finance. I don't know what their issue is with that, but at least to have our numbers, that's important. So this is portfolio weekly data for week 27. So this is from January 21st, 2025 to January 25th, 2025. We have no net cash flow, so no cash deposit into the account. We have a money weighted rate of return of 0.69%, so that's a gain of 0.69%. And we have a market gain of 88 cents. We have no dividends earned. Pardon me. So this is week 27, weekly data from January 1st to January 25th. So now portfolio monthly data for week 27. This is from December 26, 2024 to January 25th, 2025. We have net cash flow of $33.20. So you have this large spike up on the chart right here. That's the $30 deposit. Happens once every 3 weeks. We auto deposit $10 every week, and when the cash balance gets above $25, it then deposits it into our investment account. That's that $30 pop right here. The extra $3.20 is likely from dividends being reinvested. We have a money weighted rate of return for the month of 3.30%, so a gain of 3.30%. We have a market gain of $11.56. and no dividend earned for that month from December 26th to January 25th. Monthly data. We have our quarterly data for week 27. This is from October 25th, 2024 to January 25th, 2025. We have a net cash flow of $123.66. That's four $30 deposits. You see the spikes on the chart. There's 1, 2, 3, 4. 4 times 30 is 120. The other $3.66 will be from dividends getting reinvested. We have a money weighted rate of return of a positive 4.43%. So it gained 4.43% over those 3 months. We have a market gain of $12.66. And we have dividend earned of 0.25 cents. So this is our quarterly data from October 25th to January 25th, 3 months. And now, because we're kind of at that 6-month period, you see up on here, we have the time frames that we can look at our charts. I always do week, and then month, and then 3 month. There's no 6 month. It goes year to date and 1 year. So year to date would be from January 1st to right now, it's January 25th, which wouldn't even be a full month of data. So we have to do a full year portfolio to get to this 1 year so that we can show you a yearly chart. So in the meantime of what I did is, so we can continue to see the growth until we get there, I've now added the all time button, so the all button. So this goes all the way back to the beginning when we started this portfolio, from July 21st, 2024 to today, January 25th, 2025. So you got about 6 months worth of data right here. And you see you have net cash flow of $344.37. Now $100 of that is our initial deposit. You see that pop right here. We went up to 100. And then all the other deposits after that were $30 deposits. So we have 1, 2, 3, 4, 5, 6, 7, 8. So you have 8 times 3, $30 deposits. So you have $240. Plus this $100 initial deposit is $340. So the $4.37 is just from extra cash or dividends getting put in. So this is all time. So this is from day one, from 0 to where we're at today. So I'm going to start adding that now because we're at the 6 month and we will be beyond the 6 month. If M1 Finance, their platform, had a 6-month chart, I would rather use that because then I could see a rolling 6-month. But they don't, so I can only do like the rolling week, month, and 3-month, and then until we get to the year, which will be, in July 2025, right? When we hit the 1 year, then we can do the 1 year rolling. So I'm just going to use the all instead and just keep that going. So you see the whole picture now, right? So over this 6-month time period, from July 21st to January 25th, we have a market gain of 9.65%. So a positive 9.65%. So almost double digits, almost 10% in 6 months. Market gain, we have $19.54. That's a market gain over that time. And dividends earned $1.28 over that time. So this is the all-time data, right? Now we go to our weekly percentages. So of course we always go over our percentage numbers. So we have gold still at 30% with our GLD ETF. We have US dollar at 20% with our UUP ETF. We have stocks at 15% with our RSP ETF. We have commodities at 15% with our USCI ETF. We have government bonds at 15% with our GOVT ETF. And we have Bitcoin at 5% with our IBIT ETF. So I haven't made any changes yet. We are now post inauguration, so I am looking to possibly make a change next week, and we'll get into that more with the charts. So our weekly data. So this is the past week of January, from I believe the 20th to the 25th, or 21st to 25th. We have our gold ETF up 2.55% for a market gain of 2.75%. We have our US dollar down 1.75% for a market loss of $1.24. We have our stocks up 1.21% for a market gain of 66 cents. We have our commodities up 0.47% for a market gain of 26 cents. We have our government bonds up 0.11% for a market gain of 6 cents. We have Bitcoin up 0.1% for a market gain of 2 pennies. 2 pennies. Right, so this is the week of January 21st to 25th. Now the monthly. So this is from December 25th to January 25th. We have gold up 5.93% for a market gain of $6. So gold's making a good comeback, right? Remember I had the drop, and we'll show that in the charts, and now it's coming back, which I was hoping for. US dollar down 0.7% for a market loss of 47 cents. So not too much going on there. Stocks up 2.9% for a market gain of $1.49. Commodities up 5.46% for a market gain of $2.77. Look at gold and look at commodities, both above a 5% gain in a month. This is why I say I don't think inflation's going away. And likely with the new administration, they're going to want to pass new bills and stuff too, which is just going to exacerbate the situation. Government bonds up 0.31% for a market gain of 16 cents. I think I'm long past due lowering this. Of course, when I do, that's when the reversal is going to happen and I'm going to lose money, but we'll see. And then, of course, Bitcoin up 7.26% for $1.24. $1.24 gain. Right, so the IBIT. So that's December 25th to January 25th. Now the portfolio quarterly data for week 27. So this is going to be October 25th to January 25th. A 3-month period. So over that 3-month period, gold up 2.77% for a market gain of $2.52. US dollar down 1.51% for a market loss of 84 cents. Stocks up 1.76% for a market gain of 78 cents. Commodities up 11.62% for a market gain of $4.97. So really good for commodities. Really good. Commodities have had a hell of a run. And of course, when I rotate into them, I'm going to literally buy the peak and it's going to drop. Just watch. But I still think the trend for inflation is going to continue. So I still think it's going to be a good play. We'll see though. Government bonds down 1.33% for a market loss of 64 cents. And the Bitcoin up 55.59% for a market gain of $6.16. So remember, we keep Bitcoin low because of this high volatility. Because you have these big run-ups, but you also have big drops as well. But man, it's been having a really good run over this quarter. Now, same thing with the chart. I'm just going to do the all-time percentages as well. So keep in mind that I've traded in and out of positions a lot, so it doesn't mean I've always had 30 gold and dollars and stocks and commodities and government bonds and Bitcoin, all of these positions all the time. But I'm just showing like the growth of the ETF. So over that July to January time period, gold's up 13.9% for a market gain of $8.82. US dollar down 0.82% for a market loss of 33 cents. Stocks up 5.03% for a market gain of $1.47. Commodities up 15.88% for a market gain of $4.84. Clearly the best. Obviously not including Bitcoin. Bonds down 2.49% for a market loss of $1.10. And then the big gainer in the room, Bitcoin up 84.33% for a market gain of $7.68. Look at the difference in how much this gains. Then you'll see the same thing in how much this loses compared to these. That's why, again, I keep it at a low percent. So we have our position changes. So I started doing this at the beginning of the year to add more transparency. So this is anytime I've made a change in allocation percentage for the portfolio. This isn't when I just add cash, because cash just gets added based on the weightings and I don't change the weightings. This is when I actually increase or decrease the percent allocation of my capital to the portfolio, depending on which asset I'm using. So there's USDI for commodities, government bonds, here at the top as an example. So on July 31st, 2024, I decreased my commodities position by 5%, and then I moved that 5% into government bonds. So government bonds went up 5%. So my portfolio is still 100% allocated. It just moved from one position to the other. I moved 5% in and out. And then same thing for each other time on here as well. I'm just going to keep this up here. So anytime I do a change, like if I anticipate I'm going to do a change, like maybe next week, I'm going to add another line, saying, I don't know, stay 5 to 6, maybe January 27th, 2025, it'll say GOVT down 5%, another one, and then move it over to USCI 5% or something like that as an example. So you'll see that, and then it'll stay up here so you can follow the changes of the portfolio. And then we have no portfolio transactions this week. So Illuvium updated their staking dashboard, so this all looks different now. So all the previous weeks how it looked, it's still the same system. It's just they've done the user interface. They've changed it. How the graphics and everything looks. So this is what it is now. So this is now the staking dashboard. So currently, and we just had a stake, and I'll show that. We have 7.14 ILV staked for a market value of $229.62. And you could see and I don't know why this ILV balance looks like this. It looks like it's all fucked up. I don't know why it does that. So the ILV price is $32.17 as of today. We have our 0.024 ILV that we have claimed. So that's 3 different revenue payments that we received last year. And the current market value is 77 cents. We have our Illuvium investing. I know this looks fucked up because they segment it into pages. So it can show 6 on one page, and you have to go to the next page, and then it'll show the next set. So I added one. So that's why it looks a little fucked up. I might find a better way to do this, where I could maybe do 2 pages instead of Illuvium investing. I'll do Illuvium investing page 1 and then page 2, and then it'll look a little better. But these are all the vests put together. So there's 7 now. Right? We have this new one at the bottom. I bought and staked 1.22 ILV, and I did it on today, January 25th, 2025. So it unlocks in 364 days, so a full year. So I just did that one today. So you see all of them here, going back to July 2024, August 2024, September 2024, October 2024, November 2024, December 2024. Now January 2025 is the new one. So So we have all these stakes here that are going to lock. So I added $40, another $40 to buy more in stake. And currently we have no revenue distribution for this week. So we have $0 here, but we have our claimed, again, 0.024 ILV for 77 cents. And this is the transaction for week 27. So at 8:31 today, I bought 1.22 ILV, and it's received into my wallet. And then the send is going to the staking protocol. So this is the ILV coming in, and then I staked it. So this is the transaction for that. So that $40 transaction. And those are our weekly numbers. So as always, let's go to our charts. So here we are with gold. As I was hoping, I talked about back here from February to March, this trend, it broke out of the trend, but it came back and then it continued on. And then here from December to January this month, it broke out and came back into the trend. I don't know if it's going to continue up. I really hope it does. Like I said, I don't think, not because I want it to, I just think inflation is not going anywhere. So it makes sense that gold's going up. That's why 30% of our allocation is into gold. So you can clearly see it came down, broke this trend, start coming back up. You know, you can go back here to October 2023. This is just gold in a strong uptrend. So it's been doing really good. Still going to keep that 30%. I don't have any reason to reduce that. Again, just this trend just looks really good. It just keeps going. Gold might hit 3,000. Because right now gold is at 27.70. I'm sorry, 3,000. I got way ahead of myself. 2,800 is what I meant to say. 3,000 maybe. We'll see where that goes. But 2,800 is what I was talking about. So we might see gold 2,800 real soon. That's right here. So it's just damn near right around its all-time high. It's already right there. So we might see gold 2,800 and then possibly 3,000. We'll see what happens with that. At the very least, gold's been a strong asset in the portfolio this entire time, so no reason to sell. All right, US dollar had a bit of a sell-off right here. So it was going up. Then it had the dividend EX date here, where the people who came in right here sold out of it, and they took their money and ran. But the chart was still coming up, and then it started coming down. So the dollar's coming down. And I'm sure you see on the reverse when we look at bonds, it's going up. The dollar's coming down. I still think dollar's a good position. I don't know where we're at. We haven't seen a lot of new policies coming yet and see how we're going to be spending money. But if it comes down more, and maybe if it comes down below this red line, I might reduce my position. But it still is coming up. Remember, just if you look at the DXY index, which this is basically tracking, you'll see this is what it would look like if there was no dividend, that was paid out where people came in and out. But there's still a drop right here. So you look back to let's see, where's the most recent high? October of 2022, about 114. It's heading up there, but it's starting to pull back. But it's still above kind of this range area. So we'll see where it goes from there. As of right now, we're still keeping it at 20%. Then we have our equal weight stocks. You see this hard reversal hitting this line right here. I don't know if it's going to get back up in here. I think it's just too high. I think it's too high off the chart. But let's see. I'll make that finish right there. So this is the equal weight stock index. So if you look at the SPY, you look how hard it's coming back up right to that trend line. This might be a reversal coming. But yeah, drop down and then just shot back up hard. This is all this week, right? A little bit of last week too. Yeah, no, there's a strong turnaround in stocks, clearly. I still have it at 15%. I'm still thinking about keeping it at 15%. I don't know if I want to go higher on it. I prefer to go higher on pardon me. I prefer to go higher on commodities. Commodities just clearly been the better play. But I don't think the stock index is crashing. It's definitely corrected some a little bit, and it's giving back some of its profits. But you see a reversal happening right now, still going up. So we're still going to keep it at 15%. I don't think it's gonna get back up to this trend. I don't know. I think it has to be a really strong trend. I think a new trend might form. You know, I don't want to really draw lines and fuck what I got, but call it something like that, right? Like not perfect or anything, but maybe this will be the trend. It'll still be like in an uptrend, but instead of going up like this in these green lines, it'll kind of go in this direction with these red lines. We'll see what happens. But as of right now, I'm just kind of like watching it, see what it does. Commodities. Oh my God, commodities. Popped out of this trend, right? Popped out of this trend right here. Just boom, broke out. Like commodities are strong right now. So this ETF going back to July 2022, just been a strong uptrend. But now it's broken out. It's gone even further. I don't think this is sustainable unless there's a fuck ton of money being sloshing around in the system or something. I don't know. But I think that it's better that I increase my position by 5%, even though I think I will literally be buying the all-time high in commodities, but I will be increasing it from 15 to 20. So 15% of it's been holding for a while. Just that additional 5% is going to be added in. But even if it corrects, I still think it's going to be holding this trend. Because like I said, I don't think inflation is going away. You look at gold, still in this trend, I don't think inflation is going away. It might bounce up and down, bounce up and down, bounce up and down. Same thing here, it's going to bounce up and down, bounce up and down, but it's ultimately going to be in this uptrend, in my opinion, right? That's what I think. But at the very least, I'm probably going to increase by 5% coming out of bonds into here and see what happens, but I'm pretty sure it's going to immediately correct after that. Almost guaranteed. Then we have our bond position. Speaking of bonds, I talk about this 5-year chart a lot because, bonds have just corrected post COVID pandemic, in March 2020 when like this shit just came down. I'm hoping that this is a reversal in it, but so far it's been pretty bad because it broke down, it tried to come back up, and it broke down, it's trying to come back up again. So it's still just relatively low. It's down to this level here, back where it was in April of 2024, so a little over a year ago. But may likely reduce my bond position by 5%. It's been like a bad position overall. At the very least, I've been bad managing it. I can definitely say that. Not that bonds are bad, it's just my management of them is bad. So I think I'm going to decrease it to 10. 10 is probably the lowest I would want to have my bond position. I wouldn't want to go to 5. I feel like that's too low position. I need it higher. Plus, bonds are less volatile. Like Bitcoin is hella volatile, so I keep that at 5%. But the bond position thing I'm going to reduce to 10. Now we're post-inauguration. We're towards the end of the month, kind of like I was saying, like early in the past weeks. So I was like, I'd prefer to like wait, let the dust settle a little bit, and then I'll make that decision. So I think I'm going to decrease bonds by 5%, increase my commodities position by 5%. I think that's what we'll do likely next week. So we'll see. And of course, Bitcoin. So looks like we're touching near our all-time high here. So as always, back in January, the ETFs, the spot ETFs hit, and then there's this run up in the chart. And then for like 6-7 months, we came down. We just consolidated in a downward trend. And then coming into the election in October, November, there's a big pop. I think there's even some crypto legislation that the new administration's trying to push through. I don't know what it is. I'm not going to even pretend like I went through all of it and I understand it all. I just know like the crypto market, anytime somebody high up or whatever says something, like they all get euphoric or whatever. So likely there's euphoria from that and people are excited, but I don't know. I still look at this long-term trend. Not saying it's right, but dang, this line syncs up pretty good. So we have the 2017 peak, the beginning of the 2021 peak, then the crash, and then the spike back up, and then the end of the 2021 peak, then the crash and the spike up to 2024. Now came down a little bit. Here we're at 2025. Who knows if it's going to keep going, if it's going to hold this trend or what. But at the very least, Bitcoin's had a hell of a run over this time period. All the way back here from $1,000 to over $100,000 in a span of like, fucking 2017, like less than 10 years. It's crazy. But yeah, so I think Bitcoin still a good strategic asset in the portfolio to have. High volatility, but high return potential. But I don't know if this is going to continue. I always say, like, I feel like there's other things in the economy going on. Like, look at inflation, how it's affecting, we'll look at bonds, how inflation's affecting bonds, because the bond yields are going up, but the bond prices are going down. And then look at commodities and gold, But I don't know if Bitcoin's also gonna be a beneficiary of that. Maybe it will, because people just literally will put their money anywhere else just to not have it devalue. But we'll see. We'll see how it goes. But that's the update, as always, every week. So going forward, I'm going to include that all-time time frame. So you have 4 now. So you have weekly, monthly, quarterly, and then all-time. And then when we hit that 1 year mark, we'll have 5. We'll have weekly, monthly, quarterly, yearly, and then all-time. And all-time is literally from day 1 to whatever day I'm fucking making this film or filming this video. So you'll be able to see different time frames. You'll see multiple durations. You'll see like kind of the growth of the portfolio over time. It's kind of like just see how it all happens, right? So hopefully this is helpful. As always, if you have any questions, comments, or criticisms, let me know, and have a good day.